When it comes to Spark Coin or SPK, the future looks both exciting and unpredictable. This project sits right at the heart of decentralized finance, but like every ambitious DeFi token, it faces its fair share of challenges and opportunities. So, let's break down exactly what could shape the future of Spark Coin, both the good and the bad. First, let's start with the tokenomics because that's where the story really begins. Spark Coin has a total supply of 10 billion tokens, and here's the key detail. 65% of that supply is allocated to farming rewards over the next 10 years. That's a long distribution schedule, and it's a double-edged sword. On one hand, it ensures community participation and long-term engagement. But on the other, it introduces potential continuous selling pressure as tokens get unlocked and distributed to farmers. Right now, the circulating supply is only about 1.89 billion, which means there's still a lot more to hit the market in the coming years. Unless demand rises to match this growing supply, high inflation could suppress price growth, a challenge that many DeFi projects struggle with. However, there's a bullish side to the story. The white papers outline staking and governance mechanisms that could be game changers for the token's stability. If Spark introduces staking rewards, it would encourage investors to lock up their tokens, reducing circulating supply and easing sell pressure. That kind of move could help maintain price stability while creating incentives for long-term holders. Now let's talk about the ecosystem, because Spark isn't just another DeFi project. As part of the Sky ecosystem, formerly known as MakerDAO, one of the biggest names in decentralized finance. This connection could bring powerful integrations, collaborations, and liquidity support that help Spark scale faster. On the news front, recent updates have been both promising and cautionary. The $100 million superstate allocation and PayPal integration are undeniably bullish catalysts that could shape Spark's future positively. But the history of price crashes following airdrops and token unlocks continues to cast a shadow of volatility over the project. So where does this leave Spark Coin? In simple terms, Spark's future depends on a few crucial factors. Whether token inflation can be managed through effective staking and governance systems. Whether the Sky ecosystem connection continues to bring meaningful partnerships. How well the project competes with DeFi giants like Aave and Compound. And finally, how regulations and market sentiment evolve over the next few years. If Spark can maintain strong fundamentals, attract new users, and stabilize its token economy, it could remain one of the most promising DeFi protocols in the market. But if supply pressure, competition, and regulatory risks outweigh its progress, the road ahead might be much tougher. Either way, one thing's clear, Spark Coin is not just another token. It's part of a bigger financial experiment reshaping decentralized lending and yield generation. The next chapters of this project will depend on how well it balances innovation, sustainability, and investor trust. Because in the ever-changing world of crypto, it's not just about hype. It's about who can last the longest, build the strongest, and adapt the fastest. That's what will truly determine what could affect Spark Coin in the future.
This is the Spark liquidity layer, and this is what Spark is. What we launched at the end of last year, called the Spark liquidity layer, is now scaled up to $3.7 billion in capital that's been deployed. We've really been able to tap into new markets that we used to not be able to access in just sort of the DeFi-centric environment. So Maker was historically constrained to over-collateralized crypto lending, like ETH, LSTs, and then various wrappers on Bitcoin. And so now we have new products that are accessing markets like, for example, the Coinbase Bitcoin Whirl product that was launched by Coinbase at the beginning of this year. We're supplying 82% of the capital into that. And then that's a new market that we're able to tap into pretty uniquely within the space. Additionally, we're also deploying into Maple. A lot of the TPL growth there is actually us ramping that up because, you know, as people who own Bitcoin, we see a lot of growth in the price of Bitcoin. Not necessarily everybody wants to wrap Bitcoin on Ethereum. You know, maybe they're Bitcoin maxis, maybe they're institutions, they don't like touching smart contracts yet. It's fine. I think our goal is to cater to all these users exactly where they are. So through products like Maple, we're able to deploy capital such that institutions, BTC holders can access loans. It's the exact same sort of structure that we have on chain, but they can use their favorite qualified custodian instead of on chain, which is perfectly fine. So we've really been able to expand the balance sheet of what we can access for the past couple, it's even just been months. Like, it's crazy how fast it's scaling. So this is the Spark liquidity layer, and this is what Spark is.